Right. Regular people not yet come. So right, we'll start now. It is already 6:05. We'll start now. We have stopped with the problem last class. I think we have done up to problem number 12. We have done. So we'll go for problem number 13.
Can you explain dividend once again?
Yes, Anand?
Can you kindly explain dividend once again, sir?
Okay, so we are going to do the problem that I will explain once again. Okay, here the problems, all the problems are with the dividend. So with the problem, I'll explain. Okay, and let's see. The one thing we have to know, if it is a pre-acquisition dividend, then it should be adjusted with the investment. When you invest, the entry would be investment account debit to bank. If you are getting any pre-acquisition dividend, then the entry supposed to be for the share of pre-acquisition dividend will be bank account debit to investment. This is what we're supposed to do. But sometimes what happens, wrongly you might have credited to profit and loss account or something like that. In that case, for the rectification, we have to make the entry profit and loss account debit to investment account. So investment account get adjusted for the pre-acquisition dividend. So that is what we have seen in the last class. Nothing more than that. If anything, dividend payable is there, if it is certain, then we will be considering. If it is not certain, then we will not consider. How to identify whether it is a certain or not? If they say that the AGM is going to be conducted, not yet conducted, it is only the intention of the company to declare the dividend. So that is that we will not consider in the financial statements. Only when the AGM is over, resolution is passed, then only we can consider. So that is what the another part of that one was there. And if dividend payable is there, see, this is parent company and subsidiary company. Subsidiary company. So dividend payable in the subsidiary company will be there under current liability. Dividend payable is there. Let's say 2,000 is there. In the parent company, dividend receivable it will be there. Because they declared so to receive it. So dividend receivable will be there to whatever their share, 1,200. 800 is share of the non-controlling interest. So what we have to do, see here, the mutually it is 1,200 will be cancelled. In the consolidated balance sheet, we have to take only Ncaa interest. So dividend payable, only the share of Ncaa should be considered, because this dividend receivable and this dividend payable for 1,200 gets set off. They cancel each other. So dividend payable only to the extent of Ncaa we have to show it. Here how much is that? 800. So this is what we have seen in the last class. Yes, this we will be discussing while doing the problems also we will be discussing. So no issue, you will get it. Okay, right. If you're not getting it, we can discuss. Right, Anand? Still not getting? Anand? Anand? Still not getting?
No, sir.
Okay. So you are getting or not getting?
Getting, sir.
Getting, okay, right. Where is Sheetal has not yet come. Okay, right. And another spokesperson of our class, Rukshita, she has also not come.
Sir, one small.
Right, go
Sir,
13.
Sir, one small doubt, sir.
Yes.
Sir, this recorded, I don't know whether I am right in asking this question. This
Okay.
recorded version available in the YouTube, sir. Supposing we miss one or two sessions.
Yes, it is very much available in the YouTube. They have asked me, see, it is what is there in the particular YouTube you can't identify. So Institute has asked me different classes, what all the things are taught, the subject, the lesson you're supposed to give. So I'm here to prepare that. But it is everything is available. You have to search it. The class number 1, 2, 3, something like that. It is there. So you can, yes, it is very much. It is there in the YouTube.
It might be not a mistake from your side, sir, but I believe that the institute is missing one or two classes from in between in every
Yeah,
session.
see, this is the new thing they have started. The first time they have started, neither me nor the institute or you, we are not used to it. So slowly, it is a teething problem. It will get it. Next time, it will be very very perfect. But this time, everybody has to adjust a little bit. You, me, institute, everyone. So yes, they are trying. Sincerely, they are trying. So that we have to appreciate. Yes, little bit problem is there. I'm accepting that. But this is the first experience for everyone. So some people, they have appointed the people. They come here for 2-3 days and they have gone for hosting this one and all. They have appointed the people, technical people. They do 2-3 days they come and they were working, and suddenly they got the other job. They left this job and gone. So that way, little adjustment everybody has to do. Yes, it'll be wonderful. In yes, should be in the next session. Should be wonderful. Hopefully, right. Chaliye, right. We'll go for the problem now. Shall I go for it? Still, you have some doubt?
No, sir. No, sir.
Okay. We'll go for it. Right. So intercompany dividend, the problem number 13 here. Be careful about the date of acquisition. The date of acquisition is one of the very important thing, which decides everything. So be careful whenever you are reading the problem, just underline the date of acquisition, because that is one of the things we might miss, and our calculation totally it will be going here and there after spending so much of time. So first thing you have to, whenever this type of problem you do it, underline the date of acquisitions. Okay, this is not at all required, but still I keep writing it. The reason is, so that is the main thing we supposed to know. If you don't notice that, then that will become, the entire problem will go wrong. So here, date of acquisition. 1/10/2017. So this is mid-year purchase. So we have to be little. Yes. Right. Let us read the problem now. Who is going to read? Yes, Anand, you read today. You are the spokesperson of the class today. Read the problem number 13. 1-3.
Some problem with my mobile, sir.
Yes, Vaiba.
Yes, sir. P acquires 60% shares in Q on 1/10/2017. Q makes profit of 10,000 in year 2017-18 and declare dividend 6,000. NCI is valued at 12,000 at acquisition. Balance sheet. PPE.
So we need not to calculate. We need not to calculate NCI because already they have given. So no need to calculate. We have to take that value as the right value, and accordingly we have to proceed. Yes, balance sheet they are given, and Ncaa they show consolidated and separate balance sheet in the books of P. P is the holding company, parent company. In the parent company's books, we have to show consolidated and the individual balance sheet we have to show. Okay, right. So first is we have to decide how much is the profit for the current year. That we have to know. Profit for the current year, here other equity, how much they have given for the Q Limited. Other equity, how much they have given for the, okay, first is calculation of profit for the year. Okay, not profit. Profit on profit on 1/4/2017. How much was that? That we have to find out. So here the profit for 1/4/2017. How we have to calculate? Profit on 31st March 2018. How much they are given? This is other equity. How much for the Q Limited they have given? They have given us 4,000 rupees. Okay. Add dividend paid. Dividend paid 6,000. Dividend paid is 6,000. So total profit. This is balance. Balance of profit on 31st March 2018. This much. And add dividend. This is the 6,000. So balance of total profit 31st March 2018 is 10,000 less profit for the year 2017-18. In the problem, they have given very clearly Q makes rupees 10,000 profit during the year 2017-18. If you do this, then profit on 1/4/2017 is nil. Okay. Any doubt in this? This is calculation of profit on 2000 for Q. This is the first thing we have to do. So why we need this? Because the pre-acquisition profit we have to consider for the purpose of calculating the goodwill or whatever is there that. So for that purpose we have to know that, right? Now let us go for the analysis of profit. Second. So in this, pre-acquisition profit, post-acquisition profit. So total profit is how much? Total profit 2017-18 is 10,000. 10,000. So for 6 months up to September, that is pre-acquisition profit. This is October to March. This profit will be October 2017 to March 2018. So 10,000 is the profit. The profit will be 5,000, and here it is 5,000. So share of P Limited and share of Q Limited. So P Limited and Q Limited, what is their proportion of holding? Investment in shares 21,000. P acquires 60%. They say so 60%. and 40%. So 3000 and here also the 2000 will be coming. Similarly here we'll have P limited and share of Q limited, Ncaa share of non-controlling interest, P limited share of non-controlling interest. So here you will be getting how much? Again 3000, 60%. So 3000 and 2000. Okay, we got it. Now we have to find out what is goodwill. Is there any goodwill? Or what is the gain on bargain purchase? So what is the occasion date? What entry we pass? On the date of occasion we pass the entry net asset account debit to non-controlling interest. This they have given already 12,000 and to consideration. How much the consideration? Consideration was 21,000. Consideration was 21,000. And how much is the net asset? So 3. Calculation of net asset. Equity the equity was 25,000. Add pre-acquisition profit 5,000. So how much we got? 30,000 is the amount. So this is the net asset. On 1/10/2000. Date of acquisition, we are finding out how much is net asset. Okay, right. So this has come 30,000. And so here, how much is there? 33,000 is there. So here we get the goodwill as the balancing figure. Goodwill account debit. So this is the way we can get it. Otherwise, the way we have done in the book, you can do that. Whatever the credit side minus debit side, if you do that, you will be getting. So in consideration plus Ncaa minus net asset, if you get a negative figure, a positive figure, then that will be gain on bargain purchase. If you are getting positive figure, then that will be goodwill. So credit side is more than the debit side. So it is a goodwill. So balancing figure is coming in the debit side, that is goodwill. If you are getting the balancing figure in the credit side, then that will become the gain on bargain purchase. Any doubt in this? Any doubt in this? Any doubt in this?
No, sir. No, sir.
Okay. Okay, right. So Sheetal, you are joined. Okay, right.
Yeah, good evening, sir.
Good evening. Now we can go for the consultation and a reporting date, how the equity will be there, that we have to get it in side by side. We will do it, no problem. Leave some space because we may need to do the workings. So leave space and do the consolidation. So, balance sheet for the guarantee as on close of as on close of 31st March 2018. 31st March. So here this is separate balance sheet and it's consolidated balance sheet and this is separate balance sheet. Okay. Particulars. Standalone. Separate balance sheet they call it. Separate balance sheet. Then consolidated balance sheet. So there's the details. Okay. So this is asset side. Non-current asset. Look at that. First is PPE. The separate balance sheet we have to show PPE of P is 50,000. And here we have to have 50,000 plus Q limited 30,000. So this has become 80,000. Right. Then we have to have the goodwill. So goodwill is here. We have already calculated how much is the goodwill. 3,000 is the goodwill. So the 3,000 goodwill in a consolidated balance sheet we will be doing it. This is working note 3. As per working note 3, we got a goodwill. Then investment in non-current investments. Non-current investment. Investment in Q Limited. How much is the investment in Q Limited? 21,000. This we will not show here. Right. Next is the current assets. Current assets. So current assets they are given here. And one more thing is also there here. We have not passed the entry here. We have received. What we have received. We have received dividend. In the dividend. Okay. Dividend received. Acquisition dividend received. So the dividend received Pre-acquisition dividend will be 3,000. We can say that. In this 3,000, 60% is for P Limited, and non-controlling interest, we don't bother about it. So here, how much is this? 3,000 into 60% is rupees 1,800. So we have what entry we supposed to pass for this? What entry we have to pass? So this supposed to reduce the investment. So the entry would be investment account, bank account debit, to investment account. 1,800, 1,800. This is the entry we pass. So the investment here in the consolidated balance sheet, we don't have any this one, but for this 21,000, this 21,000 will get adjusted because it's a closing. Closing one investment will be, what do we get here? So this is our total investment is 21,000. We know that. So 21,000 minus 21,000 on current investments. Right. So this will be 21,000 minus 1,800 will be coming here. Sorry, friends. Okay. So the pre-acquisition dividend will be bank account debit to investment. 1,800 investment in Q Limited. So this entry will be making. So here 21,000 minus 1,800 will be the entry for non-current investment. Under that, investment in Q Limited. Investment in Q Limited on 31st March 2018 would be 21,000 minus 1,800. So this will be 19,200. So that is the amount we have to show here. $19,200. Nothing will come there. Then the current assets, you have the current assets of current assets. How much? Current assets you have 20,000 for this one. So 20,000 you have 20,000 plus 20,000 plus this amount. This one. How much is this? 1800 we have received. This amount, total amount, this will be there. So this is what we have got here, this one. So this has added because we have received the dividend. So that also we have to add it. So the total amount we get is 21,800. And current assets here we'll be getting for this one, just we have to add it here. How much for the Q limited? How much we have got? Current asset is 14,000. So 21,800 plus 14,000. So 21,800 plus 14,000. Then intercompany 14,000 plus intercompany, whatever is we have set off, there also we have to do it minus. So 20,000 plus 21,800 plus 14,000, and intercompany setup is also there, so that will be also get adjusted minus 1,800 minus 1,800. Here this will get set off. So the total has become 34,000. Okay, when we have credited that time, dividend payable will be there, dividend receivable will be there. So here dividend receivable and the dividend payable is get cancelled. That is what that 1,800 is all about. Okay, right. Come to the next one. Sorry, ho gaya hai, total it now. This is total. Okay. Now, equity shares, there won't be any change here. Equity and liability. So first is equity. Equity will be here. Equity shares are 60,000, and there will be an adjustment here. 60,000. This has come. Second is other equity. So other equity, how do we get? Okay, other equity. Okay. This is consolidated item, P Limited. Okay, P Limited, they have given in the other equity. How much is the amount? They have given 16,000. They have given plus P Limited 16,000 and share of post-acquisition profit 3,000 into, already we have done that, 3,000 into 60 by 100. So it has become 1,800. Okay. So, sorry, we have current year profit, I take post-acquisition profit. 5,000 का 60%. $19,000. So that is what they have shown here, other equities. So for this 16,000, and here we have 19,000. Right. Now non-current liabilities. Is there any non-current liabilities here? No non-current liabilities. Okay. Then current liabilities. We are not taking the Ncaa. I have to calculate. I'll take the Ncaa. Okay, this is the third item. Okay. Other non-current liabilities. Non-current liabilities, nothing is there. And current liabilities. Current liabilities, we have trade payables. Trade payable. Trade payable 15,000 plus 15,000 plus 9,000, that will come in the consolidated. So that is 24,000. A dividend payable we have to take only for the Ncaa we have to take. Dividend payable. Other current liabilities. Under other current liabilities. Dividend payable. Nothing. So we'll be taking a total dividend was 6,000. In that, share of Ncaa 40%. So that we have to take it here. That is 2,400. Now we have to calculate non-controlling interest on 31st March 2018. Ncaa on date of acquisition. Ncaa and date of acquisition, it was given 12,000. Ncaa and date of acquisition was given as a 12,000. Then post acquisition profit, share of post acquisition profit, how much it will be? 5,000 into 40 by 100. So this has become 5,000 into 40 by 100. Yes. So there has become the 2,000. What else is there? And whatever dividend payable is there, that we have out of this we have transferred to less dividend payable. From the dividend payable, 6,000 was there. On that, 40% is the dividend payable. So this is 2,400. We have to minus it. Then you get the Ncaa on 31st March 2018. So 14,000 plus 2,000 minus 2,400. 13,000. So this is 11,600. So Ncaa is 11,600. So we'll be taking here Ncaa 11,600 weighted. Now you totally will be getting small correction here. It is not bank account debit to, and say here we have to take here as dividend receivable. Dividend receivable account debit to this. So here also this is not the bank, this is dividend receivable. This is dividend receivable, okay. Yeah. So this amount and this amount, this yellow highlighted thing, this is dividend receivable. Okay. Dividend receivable account debit to investment in Q Limited because dividend is yet to be paid. They have shown here in the separate balance sheet dividend payable 6,000 they have shown, so the dividend is yet to be paid. Now you totally will be getting the issued tally 83,037. So 1,17,000. This is 1,17,000. How much is this total? 60,000 plus 19,000 plus 11,600 plus 24,000 minus plus 2,400. So 1,17,000. In separate balance sheet, there won't be any problem because the same thing you have taken. So whatever is there, it is already given. Just it is presentation, nothing more than that. So this is what we have to do here. And here they say that also with this problem gets over. One thing we have to do here, understand here they say declare dividend 6,000 and this trade pay after the trade dividend payable is given as 6,000. So the dividend is not paid. So here the entry would be pre-acquisition dividend, dividend receivable account debit to investment in Q Limited. Dividend is to be paid. Yes, who can tell me dividend should be paid from the date of declaration? कितना दिन के अंदर pay करना है? How many days, within how many days the dividend is to be paid? From the date of declaration. Any one of you? Vaibhav? Vaibhav? Okay. If you are not able to tell me, you can type it. You can text in the chat box. The chat box, you can text it. Okay, yes. Within 30 days from the date of declaration of dividend, dividend is payable. So practical one because the balance sheet is 31st March 2018 and for the current year dividend is payable 6,000 they have given, not the interim dividend also they say. And it is very funny how on the date of the balance sheet, because the account you have to close, then you have to declare the dividend. So how they have declared the dividend and it is shown as the dividend payable outstanding is very funny. But for the sake of the problem, you have to do that. But in the examination, you will not get this type of questions because dividend, you can close the accounts, at least 3 months it takes. And once the accounts is approved, then it is to be put before the annual general meeting. Generally, annual general meeting happens on 30th September or between 30th September and October it happens and the dividend is declared. how come this? No idea. Dividend payable they have shown as outstanding. Anyhow, so this is the way we have to do this. Now, the next one is, see, sometimes we buy the shares. You are holding 40% shares and you are controlling. And you are purchasing another 10%. We already discussed how the power to control, we have discussed in the previous class. The power to control you have, and you have bought some more. When you have the power to control, then the rest of the things will be considered as only minority, non-controlling interest. We will be assuming as if the non-controlling interest is bought, not the investment is bought. We will be considering as if the non-controlling interest is bought. The non-control interest will get reduced in our Ncaa, from the Ncaa. We have to reduce it. So how we have to do that? Let's see here. So when we buy the shares, when we buy the shares, or sell the shares, when the non-controlling interest is not disturbed. See, suppose you have 50% interest in the company, 50% share in the company. Let's say 50, not 50%. I'll take the 60%. You are the parent company holding 60% share, and you sell 5%. What is going to happen? 55% is going to happen. So here we are assuming that the non-controlling interest is increasing, nothing else. So we will not consider that as of the investment. We are selling the investment, of course, but in the consolidation we will be what is this one consolidation? The non-controlling interest is increasing. So that is one point. But the control power, your control to power the entity doesn't change. It is in your hand only. Similarly, you have the 70% shares with you and buying another 5% from the non-controlling interest. Then we will be assuming as if the non-controlling interest is bought. We will be assuming as if non-controlling interest is bought. In this case, we will be assuming that the non-controlling interest is increasing. Somebody has bought from the non-controlling interest, and non-controlling interest is increasing. The consolidation will be doing. Okay, so how we have to do that? That is another problem. When you have already had the control and you are shedding out part of your control, that is like disbursement or something like that, then what is the entries we supposed to make it? Okay, right. See the problem number 14. Before that, please, Sheetal, read change in Ncaa.
Yes, sir. So it's change in Ncaa. Okay. When the proportion of the equity held by non-controlling interest changes, an entity shall adjust the carrying amounts of the controlling and non-controlling interests to reflect the changes in their relative interests in the subsidiary. The entity shall recognize directly in equity any difference between the amount by which the non-controlling interests are adjusted and the fair value of the consideration paid or received, and attribute it to the owners of the parent in other equity.
Okay, right. So they are given the problem. Please kindly see that the 14th problem. 1/4/2016, BM Limited acquired 80% of share in CM Limited at rupees 10 lakhs. When the fair value of the net assets was 10 lakhs. During 1/4/2016 to 31st March 2017, CM Limited total comprehensive income is 1,20,000. On that date, BM Limited sold 20% of holding to outsiders at 2,80,000. First journal entries for the sale or partial holding, the retaining of the control. So here, whatever the difference is there, in the Ncaa it is increasing, including the other equity we have to consider. Including the other equity, we have to consider how much is our profit is decreasing, that we have to see here. So they have given here the net assets. Starting of the period is it 1 lakh, 10 lakhs? Oh, yes, it is 10 lakhs. Net asset is 10 lakhs. And you have got the profit of 1,20,000. So net asset at the end of the period becomes 11,20,000. So 11,20,000, you are selling, how much you are selling? Ncaa remains, you're selling 20% of your share you are selling. So Ncaa will be 20% of that is 224. You have 80%. 20% of the Ncaa will be 11,20,000 into 20%, you get this one. So the value of Ncaa is 2,24,000, and your sale price, your consideration is only your consideration is 2,80,000. So the entry would be, so bank account debit 2,80,000, and the non-controlling interest share is 2,24,000, and other equities for the balance they say that. So the equity would be adjusted for this purpose. You had 80% and Ncaa was 20%. And what you are doing here, one photo was 80% CM Limited, 10 lakhs fair value. During this date, CM Limited made the total compensation of 120,000. On the date, BM Limited sold 20% of holding to outsiders at 280,000. So the amount you are getting 280,000. So the Ncaa, for the Ncaa 2,24,000 you are getting, and for the other equities, the balancing amount you are getting. So the other equities also will get reduced to that extent. The difference. We should not write this as the goodwill or gain on bargain purchase, that we can't write it, because that will be only if your power is, you are losing the power to control, then only you can do it. You can do it. If you are not losing your power to control, because it is not going to make any difference on your control, because 80% you had, 20% you have sold. If you are selling above 30% or 29% and above, then only your power will be getting reduced. More than 29%, if you sell it, then it becomes a 50%. Then your power to control is either party's hand. Therefore, we can say that yes, there is a reduction in the power to control. There you can consider goodwill or bargain purchase, anything you can consider. But here, you are selling your shares. Just like that, profit on sale, loss on sale of investment we have to do. So loss on sale or profit on sale is get adjusted with the profit and loss account. Here the profit and loss account we don't say, we say the other equity, that's it. So we have to consider here any profit or loss is to be adjusted with the profit and loss account, because your power to control is not changing. That is what they say here. Profit, and instead of writing profit and loss account, they have considered this other equity. So when should we do this? When your power to control is intact even after the sales. When your power to control is intact even after the sale, or when you are purchasing, when your power to control is not going to be different. See, 70% you have, 5% you are purchasing. Doesn't make any difference. It is not going to make any difference. It is going to make the change only in the Ncaa. Your power to control is not going to change. That also we have to consider as a profit and loss only. Anything increase or decrease is there. Anything you have paid consideration more or less, that should be adjusted with the profit and loss account. Technically, we have to call here as other equity, because here everything is right under the head other equity. Are you getting me? When we have to do it this way, when the power to control is not going to change. Power to control is not going to change. When you have the 51%, your power to control is not going to change. If you buy more, still you are going to control the company, the subsidiary. So when the power to hold, power to control is not changing, that portion is not changing, only there is increase or decrease in the Ncaa, then any profit or loss on sale or acquiring of the shares should be adjusted through profit and loss account. Are you getting this? I'll write here. Take a note. And the parent companies additional acquisition or transfer of investment does not affect the power to control. Power to control, then resulting profit or loss should be adjusted through profit and loss account, that is other equity. Okay, so here suppose something is there, let us not take this, let us take one asset, let us take a fixed asset. You have the fixed asset 10 lakhs, the book value is 10 lakhs. Case 1, sold for 11 lakhs. Second case, sold for 10 lakh 80,000. First case, what entry make? Bank account debit. Bank account debit to fixed asset account. Bank account debit to fixed asset account. How much? 11 lakhs. 11 lakhs. Then fixed asset account debit to P&L account. This is what you write. 1 lakh, 1 lakh. The profit and loss account is nothing but the other equity. So इसमें entry क्या आएगा? Bank account debit, fixed asset account debit to P&L account. This is what going to come. The second case, what will mean? The entry will be bank account debit 10 lakh 80,000. P&L account debit 20,000 to fixed assets account. How much? 11 lakhs. We do it. So this way you consider when your power to control is not changing. This is the way you have to treat. as if you are selling the investment. So this is the way you have to consider. So here inference. Consider a sale or acquisition of investment in subsidiary as like any other assets. Any other assets. So any loss or profit which is coming transferred to profit and loss account. A resulting profit or loss coming should be transferred to profit and loss account. So that is what we have to do here. So here the entry will be transfer of shares. Okay. Transfer of shares without losing, without sacrificing power to control. So the entry would be a profit. At profit. So entry would be bank account debit to Ncaa to other equity. And if loss, that will be different. Bank account debit other equity debit to Ncaa. So when you are not losing the power, only adjust the Ncaa and other equity. Do not write as gain on bargain purchase or goodwill. Okay, this is what we have to do it. So this is problem number 14. Okay, now this is a sale and they have arrived for the additional acquisition when you are already the holding company. You are a holding company and you are purchasing additional shares. So see here. Okay. So same thing here for purchase, what entry we have to make? Purchase of additional shares in subsidiary without change in power to control. So what will be the entry? If at profit you have, we will be assuming as the Ncaa is purchased, Ncaa account debit to bank to other equity. At loss, Ncaa account debit other equities account debit. to bank. Okay, so this is what we have to do it. So profit or loss on purchase or profit or loss on sale should be adjusted with the profit and loss account. That is to equities. This is what they have shared here. Shita, please kindly once again read the point number 24, change in Ncaa.
Yes, sir. When the proportion of the equity held by non-controlling interest changes, an entity shall adjust the carrying amounts of the controlling and non-controlling interests to reflect the changes in their relative interests in the subsidiary. The entity shall recognize directly in equity any difference between the amount by which the non-controlling interests are adjusted and the fair value of the consideration paid or received, and attribute it to the owners of the parent in other equity.
Okay, right. That's it. And is nothing they say that you consider as if you have purchased a new asset or as if you have sold any other assets. So the profit or loss is to be adjusted with the profit and loss account. Technically, we have to say that from the other equity. That's it. I'm not doing the 15th problem because this is for the purchase, not for the sale. This is for the purchase. Okay, that's same thing. Go for the most important problem, chain holding. And if I set the paper, I will be giving this question number 16 for the examination. And if I give the exam also, I will do this problem at least 20 times. I will pen down at least 20 times this problem, such an important problem. I don't know the question papers will be, it will be printed or this one only about 2-3 days before. I don't know the question paper. Don't ask me after the exam, sir. You knew the questions. You were knowing the questions. No, I don't know. But this is only the prediction. This is only, the my intuition. Nothing more than that. But if I set the question, I will set the question in the chain holding or cross holding. Cross holding, no question is given in the exam and the study material. Therefore, cross holding is ruled out. Chain holding, pakka, aneka chances for 16 marks. Okay, 16 marks are not a small mark. So, yes, small questions also, if you are doing the same question, may be given in parts, they may be asking. Okay, part by part, they may be asking in the, online mode. Okay, so this question, please kindly do it again and again. Nothing very different, very simple. Instead of 2 companies, here there may be 3 companies. See, like this, there are 3 companies. A, B, C are there, and A is holding company to B, and C is holding company to C. B is holding company to C. Therefore, C is also holding subsidiary to A. So that is what we have to do it. Suppose let's say A bought 80%, let's say 90% in B. Okay, and B bought 70% in C. So what will happen? A's share in C will be 0.9 into 0.7. How much is this? 63% share the A will be having in C. Non-controlling interest of C will become how much? Non-controlling interest of C will become 100 minus 63 for A. Non-controlling interest share will be 100 minus 63. 37% will be the Ncaa in C and 10% Ncaa in B. So this is what will consolidation we have to do it. That's it. Nothing more than that. Very simple. And this type of problem will be coming straightforward problem will be coming. We will not have so many the difficulties to do the things or lengthy problem will not come. Only this is the part we have to do it. Nothing more than that. Okay. So how we have to do? Let's see here. What happens? We had how many? 13 people, and in that 4 had gone. Okay, right. So now I am the host. Okay, right. 3 had gone. Might be Anand's problem is his net is not हमेशा इनको साथ नहीं देता है. Right. Go for 16th problem. Illustration 16. Prepare consolidated. Prepare consolidated balance sheet of group P Limited, Q Limited, and R Limited, for which the abstracts of balance sheet 31st March 2016 are given below. So they have given everything. And the second page they have given total assets, equities and liabilities, equity share capital this much, other equities, current liabilities, trade payables, bills payables. Okay, right. Control was acquired on 30th September 2015, and on 1/4/2015 the balance other equities 200 and R 50. Ncaa measured at fair value. Clearly they have given we have to measure the Ncaa at fair value. Okay, right. Inventory of Q included 16 rupees 16 purchased from R at cost plus 1/3. Bills receivable of R includes 30 from P, and bills receivable of R includes 40 from Q. Bills receivable of R includes 30 from P, and the bills receivable of R includes 40 from Q. This is one of the big mistake in this. It is there. I'll tell you what is there in a while. Here in R's balance sheet, they are given bills receivable something. So R's bills receivable is bills receivable from P, bills receivable from Q. They are given how much they are given 30 from P and 40 from Q. So total bills receivable supposed to be 70. How much is bills receivable is there in R? Bills receivable in R is 50 they have given. That means they have discounted 50 is there. So bills discounted is 20. Anything discounted bill, if the DOI is not paying, there is a contingent liability. The contingent liability is to be shown in the balance sheet. Underneath the balance sheet, you have to show as a footnote. But your own bill, you will not show it. So, sir, what is the mistake? Okay, right, everything is all right. What is the mistake? In the book, it is there. We're doing the problem. End of the problem, I'll explain. You will get it. First, let's go for this problem, how we have to do it. Okay. Right. See here first. Let us understand how much is the holding. Okay, they say that okay, what is the chain holding? 3 companies are there. This is in, this is in. So that is a chain holding. Okay. Okay. So here
Sir, what is the difference between chain holding and cross holding?
the cross holding is, see this companies. Okay. See this is A, B, C is there. A is invested in B and B is invested in C. This is chain holding. A invested 80% in B and B invested 70% in C. This is a chain holding. This is chain holding. Cross holding. Okay. A is invested in B 80%. B is invested 40% in A. And B invested in C 90%. C invested in B 30%. So something like that. This is the cross holding. So A is holding in B and B is holding in E. That is a cross holding. And another one is also there, that is triangle holding. Triangle is A, B, C is there. So A is holding in B and A is holding in C and B is holding in C. So here 60% and B is holding 80%. A is holding 10% here in C. So this is a triangle holding. Okay, getting it?
Yes, sir.
Okay. Right. Let's go for. We don't. This is not there in the course, so let us not. So here we have PQR. PQR. So P is holding how much? 80% in Q. Q is holding 75% in R. Okay. And company P. Control in Q. How much is that? Control in Q is 80%. Control in R. So 0.8 into 0.75. That is 60%. Subsidiary company Q. Pools control here 75%. Okay, right. So therefore, P's control in Q is 80% and P's control in R is this one. This is the control. So this we are taking. This is the first one. The second one, analysis of other equity. Then other equity Q and R. So on the balance sheet is given for which date balance sheet they have given. 31st March 2016 they have given. See, this is other equity on 31st March 2016. How much they have given other equity? Other equity, the next page they have given, it is other equities are 160 and 120. 160, 120 they are given. And the control was acquired on 39/2015. On 1/4/2015, the balance was, other equity was 150. Okay. 1/4/2015, the balance was, okay, other equity 1/4/2015. How much it is? 180. Current year profit 60. If you minus it, you get the profit, current year profit 60 and 40. ये तो कहीं नहीं दिया था. It was not given in the problem. है ना? Yes. So the current year profit is this. Okay. Pre-acquisition other equity. On 1/4/2015, how much it was? 160. Add 50% of other equity for 15/16 of 15/16. So here it will be 30, here it will be 20. Other equity on the date of acquisition. 130 and 80. Any doubt here? Any problem here? Other equity. Okay. So now let us find out what is post-acquisition profit. Other equities on the date of acquisition we have found out. Calculate the profit for. Okay. Okay. Pre-acquisition other equities हो गया है. How much they are given here? 100 for. And Ncaa on the date worth this much. Okay, right. तो इसका पहले हम अगर ये pre-acquisition P Limited, and this is for use P Limited share, and किसका है? Ncaa Q pre-acquisition P Limited and Ncaa R. Yes.
The opening balance for other equity given 100 and for our
For opening, R is how much? Oh, acha. I've taken which amount I have taken here. 1 minute. So here they have given closing equity, they have given closing other equities 160, 120. Okay. And this is 150. I'm sorry. 150. So this will become 60 and 70. So 30 and 35. 30 and 35. Okay. So our pre-equation P limited will be 130 into, what is the share here? Share is 80% into 0.8 and 130 into 0.2. Here it will be 80 630 95. 95. So okay. So here 95 into, how much is the share here? We have share 60% into 0.6 and 95 into 0.4. कितना हो जाएगा? So 130 into 0.8. That has become 104. And 130 into 0.2. That is 26. 95 into 0.6. That is 57. 95 into 0.4. 28. Okay. So pre-equation we have got it. How much is post-equation that we have to see. So here post-equation. Post-equation will be again Q limited 30 and for R limited it is 95. Now P limited and Ncaa Q limited. P limited, Ncaa R limited.
Sir,
Yes,
sir, other equity of R is 85. Opening other equity of R is 50.
opening of other equities of R is 50.
So you take 60.
Okay. Everything will change. 1 minute. Okay. Opening is 150. Here also I have taken the different amount, other equity. Acha, current year profit I have taken as this. Okay. Opening 50 and 55. This has become 85. How come this is missed out? I don't know. 85. So 85. 85. 85 into 0.6 is 51. And 85 into 0.4, 34. 34. Here it is 30 and 35. 30 and 35. So here 80% will be 80%, 20%. So here 24 and 20% will be 6. And here 60%, 40%. 35 into 0.6 is 21. And 40% will be 35, 14 into 0.4, 14. We have got ये सब हो गया. Right. Now we go further. ये सारे हो गए 21 into 14. Now non-controlling interest. On 30th September 2015. Q and R. Non-controlling interest on, we already calculated that. Here, how much they are given? Any non-controlling interest is given? Measured at fair value they have given. So measured at fair value. So here non-controlling interest we have to value based on the consideration. Okay. Fair value method. Okay. So here how much is the amount? Investment in Q 480, 80% they have given. So Q will be 480 divided by 80 into 20. 480 into 480 divided by 80 into 0.2. ये आ गया है. This has come 120. Okay, 120. Then the R limited will be how much? 300. 300. 300 divided by how we have to do here. This we have taken. So for R limited, 300 divided by 75%. So you get the 100%, and we have to get in this then how much is the 40% we have to get it? Okay, because 60% they say. So we get this as, yeah. So he will be getting 300 by 70% into 40%. That how much it is coming? 300 by 75% into 40% is 400. 40% of 400 is 160. Okay, so this is the Ncaa at fair value. Okay, so इसके बाद add share of post acquisition. Post acquisition you do, this is 6 and here it is 14 is there. So Ncaa on 31st March 2016, 126 and 174. Okay. Now the next part we have to find out what is consolidated equity. Consolidated equity. P Limited 460 and post acquisition from Q. We already got it. Post acquisition from Q is 24. And post acquisition from R. We already calculated that the post acquisition from R is, we have got how much? 21 we have got it. Okay. So 21. The total has become 505. So this is not the closing consolidated equity. If any other adjustments are there, that we have to do it. If P is declaring dividend unpaid or something like that, and any Q declared dividend or R declared dividend, and anything rectification is to be done, all these things are to be done. Apart from that, any unrealized profit, if anything is there, that is also we have to do this one. See here in this problem, we already read the problem. Here inventory of Q Limited included 16 purchased from R Limited at cost plus 13%. So this we have to subtract less unrealized profit. So unrealized profit is, the 16 is there, profit on at a profit, cost plus 13 on cost, or 13 on cost. Profit is 1/3 on cost, or 1/3 on cost, 1/3 on cost, or 1/4 on sales. So here the 16 given is the sales price into 1/4. You minus this. So you get the closing consolidated equity. So this is 501. We got this. Now we can go further. Yes, we have not calculated one more thing, that is finding out the net asset. Goodwill or bargain purchase, both won't come simultaneously. Remember, goodwill or bargain purchase will not come simultaneously. Either one of this only will be coming because it is mutually exclusive. Goodwill and bargain purchase are mutually exclusive. When we make the entry, identifiable net asset account debit to NCI to consideration, ये करने के बाद आपको either you will be getting goodwill or you will be getting what? Gain on bargain purchase. Both cannot come simultaneously in one entry. So we have to consider here not only the Q, we have to consider the R also. So ये कैसे आएगा देख लीजिए. So it is mutually exclusive. Remember that gain on bargain purchase and goodwill are mutually exclusive. दोनों simultaneously it cannot come. So calculation of this I should have done earlier. Calculation of net assets. On the data purchase 19/2015 date of acquisition. Okay. Here Q Limited or Limited. equity share capital. How much the equity share capital? Equity share capital here they have given as 500 and 300. Okay, 500, 300. Other equities 100 plus 15 plus half of current year. The half of current year, that is 30 and 35. So 30 and 35. So total how much? This is 630, 385. This is the total. Okay. This is 1. Okay. Consideration. The consideration is how much? They are given here 480 and this is 480. यहाँ हम लेना है 300. They are given into इसका 60% we have to take into 0.6. Sorry, 300 का 80%. So how much is 300 ka 80%? This becomes 240. Okay, 300 they have paid. So in that the minority interest we should not consider. So our share, P Limited share will be 80% out of the investment of Q. So 300 we have taken, right? 300 into 0.8 we have taken, 240 right? NCA on 1/4/2015. Already we have calculated NCA on 1/4/2015. NCA on 1/4/2015 is 120 and 160. 120, 160. This total. Okay. This is credit side consideration plus NCA is the credit side. How much is this total? 480 plus 120, 600. This is. And debit side total is more than credit side total. Here 240 plus 160. So here gain on.
Sir.
Hanji. Yes.
Sir, if the acquisition is on September, how can we find out the NCI on April?
It is a 1/4, is a 1/9. NCA on 1/9/2015. Okay, this is the total. So this is the total credit side, and this is the total debit side. Debit side is more than the credit side, so it is a gain on bargain purchase. Gain on bargain purchase. How much is this? 30. Okay. And see here in the R Limited, the credit side is more than the debit side. That means you have paid the consideration more than you're supposed to pay. So you have paid for the goodwill. So the goodwill is here. So 15 is the goodwill. I already told you the goodwill and gain on bargain purchase cannot come simultaneously. Goodwill and gain on bargain purchase cannot come simultaneously. So then we have to take in such cases the net effect of this gain on bargain purchase is more than the goodwill. So net gain on bargain purchase. How much this will be? 15. Sometimes they may ask you to pass the journal entry on the date of acquisition in the consolidated, this one. So what entry will be passing? In this problem, they have not asked. Sometimes they may ask you to pass in the small questions or something like that when they give. So we should be able to do that. So date, particulars, ledger folio number. 1/9/2015. So here identifiable net asset account debit. How much? 630 plus 385. 630 plus 385 is 1015. 630 plus 385. Okay. To Ncaa, so that is 360. To consideration, 480 plus 240, that is 720. Okay. And to gain on bargain purchase, 15. Anything we have missed out? 630 plus 630 plus 385. 630 plus 385 is 1015. Okay. 360 plus 720 plus 15 is 1095 discount. So क्या मिस्टेक किया है यहाँ? 30, 400, 240, 120 plus NCA is 120 plus 160. 120 plus 160 is 280. I written as this is 280. Okay, so this is the way we will be doing it. As a net effect has come, but this part we have to show it. There was a goodwill, there was a bargain on gain, gain on bargain purchase. That was also there. Okay. So this is the entry on the date of acquisition. Now we have to go for the consolidated balance sheet. Okay. So consolidated balance sheet will be any problem now. It will be very simple. Just a second. Balance sheet as on close of 31st March 2016. March 2016. Let us go further. This is consolidated and separate balance sheet. consolidated. So here rupees in lakhs. Limited. Okay. Separate balance sheet and consolidated balance sheet particulars. Rupees. Here the assets. Okay. Non-current assets. PPE. How much is the PPE? Only for P is 400. And this will be 400 plus 500 plus 320, 900. So it is 1220. There is no goodwill. Non-current investment. Non-current investment. Investment in Q. Investment in Q is 480. This will not show here. Right. Then second is current asset. Current asset, we have current assets. First is the inventory. How much is the inventory? Inventory is here 250, and this will be 250 plus 80 plus 60 minus unrealized profit. How much was unrealized profit? Unrealized profit was 4. Here we have got it. Unrealized profit. So minus 4 unrealized profit. So that becomes, how much is this? 250, 330, 390 minus 4. So 386. Okay. Then trade receivables. Trade receivables, there is no mutual, so just we have to write our. So for 280, this 280 plus 120 plus 200. So the total is 580, so 480, 500, 600. Okay. See, bills receivable. Bills receivable is 70, and here 70 plus 50 minus 50. Here it is 70. Why I am doing book? It is not that. This is I'll give. I already told you in the starting. This is very important because in the books they are given wrongly. You have in bills receivable in R Limited, we have only 50. How can we subtract 70? Because bills receivable of P and Q is with R. They have already discounted 20 lakhs bills receivable. That we cannot show it. So it can be shown as the contingent liability. For your own liability, you will not show as the contingent liability. Okay. So here the mutual transaction, bills payable and bills receivable, only 50 rupees we have to minus, because only the 50 and 70 among these two, only 50 is the lower amount. So the lower amount we have to subtract, not the higher amount we have to take it. Okay, because the R Limited has only 50 lakhs as bills receivable, though they have received total 70 lakhs. That is how much, 50, 20, yeah. They're given Q Limited as 30 and 40, 30 from P and 40 from Q. Total 70 they have received, 20 lakhs they have discounted, so they have 50. Only the mutual transaction, now we have to minus only 50. We cannot minus 70 as given in the book. That is totally wrong. So you can also amend it. Please amend it. Okay. So that part is over. Then cash and bank. उसमें तो कोई problem नहीं है. Cash and bank. Cash and bank. How much is cash and bank? Cash and bank, you have 180 and 180 plus 50 plus 60. 180 plus 50 plus 60. So this total is 130, 190. 290, sorry, 290. You have total as come as 25. Total here is 2566. And this one, whatever they have given here, what is the total here? Total assets are 1660. We have not changed anything, so 1660. So the second is equity and liabilities. Equity share capital. Equity share capital is how much? 600. So 600. Here also 600 will become B. Other equity. Other equity is given here is 460. But we have already calculated the other equity. Other equity is, so here 501. Okay. Other equity. This is total. Okay. So here we have to take gain on bargain purchase. That is 15. So the other equity has become 560. So consolidated other equity. Consolidated. Take here consolidated other equity 560. So this will go to the working note. Okay. Okay. All right. Other equities are over. Then third is non-controlling interest. we have already calculated what is the non-controlling interest. So here, how much is the non-controlling interest? Ncaa 126 and 174. So here, so Q and R. Q is how much the Q is for Q it is 126 and this one is non-controlling interest. We'll come back to that. Okay, seems to be some mistake is there, right? Then liabilities. Non-current liabilities. Non-current liabilities. Non-current liabilities, nothing is there. So nil. Current liability. Okay. Current liability is how much? Current liability in that first is trade payables. Trade payables are 500 for P and consolidated will be 500 plus 300 plus 200. So this has become 190. Bills payable. And for this one is 100. So 100 plus 90 plus 70 minus 50. So here this is 50. So the total has become 210. Okay, total equity. Total 1660. We'll go for the Ncaa. Okay, right. So here in this, what we have to do here is one thing. The equities where this consolidated equities, here it is there. So here we have to one more thing. In net Ncaa less, this will be the balance, less share of investment. We have taken 240, we have taken out of this 300, whatever the total investment 300 was there, in that we have taken 240. So that 60 is also to be adjusted. So share of investment in this. So here this that 60 will be 300 minus 240. This you can take it, or we can take this as, so this has become 66 and 174. See here, the total investment was, that we have considered here. Here, this is the area. This we have considered this at 240 we have considered. The investment was 300. So this is already included in the, this is already included here. So this 126 is inclusive of this 60. So we will be minusing this from here. So what we have taken here, net asset, the net asset 300, whatever the investment B has made on that, we have taken 80%, 240. But the B's investment was 60 was there in non-controlling interest of Q. So we have subtracted that 60 because this 126 in Q is including this 60. So we have to subtract that to get this. So here this will be 66. Already we have taken that 60. So once again we should not do it. Okay. So minus here how much it was. This was for 174. 66 and 174. $240. So now what will this? It will be should tally. So 600 plus 516 plus 240 plus 1210 is the same one, 2566. Okay, this is the way we have to do it. With this, our subsidiary company is over. Now we have to do the associates and the joint venture. Then we go for off and it will be over. There won't be any problem in doing that. Okay. So in another 2 classes, we will be completing this, and this month, yes, most of the things we will be completing. At least 75% of the chapter this month we will be completing. Okay, that guarantee I give you. So let's see. I'll give some other additional class also. I'll try for that, and yes, we will do at least 80%. I'll try to cover. So baki 20%, the areas which you can cover, which you can do on your own. I'll tell you the government accounting you can do on your own. Please start reading it now. And whatever the questions has been asked in the what is that? Our scanner. Whatever the scanner is there, the scanner you do it. For the last 3 years, do it for the valuation of goodwill and the valuation of shares. And non-banking financial institutions. Those areas and all will be going very fast. So accounting standards, important accounting standards, I will be doing it. Okay, so we'll try to complete as much as possible. So I might give you some classes on Friday if everyone accepts. Okay, so let's see how fast we can do it. Any doubt what we have done? This problem is it will take you or 2-3 times you have to do it, then only you'll be understanding this. Some of the areas where you can get stuck is one is calculation of Ncaa and closing other equities. These are the 2 areas you will be in. Baki, nowhere you will be getting the trouble. Only you will be getting the trouble in case of Ncaa and calculation of other equity. And one more thing, the bills payable and bills receivable. I have told you the logic. What is the logic? Because the bills receivable is only 50 is there with the R. So you cannot, how can you subtract 70? So you can't do that. Okay, so anything, whatever you have discounted, those things are to be shown as a contingent liability, but our own contingent liability, we will not show it. So we will not do any adjustment for that. And only 50, whichever is lower, whatever the amount appearing or the amount they had given here, mutual transactions. So here mutual transaction 70, but appearing bills receivable appearing for or is only 50. So only 50 we have to subtract, not 70 that I have highlighted. 50, 50. Okay. So with this, today's class is over. Our subsidiary, holding subsidiary part is over now. 0 is over. Now the rest other days that we'll see it in the next class. So this week we have another one more class is there. I'll try to complete the other areas. Other areas I'll try to complete it. So let's see. So on 14th, I would like to give you the class subject to your availability. Okay, I'm available on Diwali ka din. Okay, right friends. Anybody, any doubt? Any one of you? Any one of you?
सर
Yes.
सर प्रीवियस क्लास का एक डाउट है.
Previous class doubt? Yes, you can ask. What was the doubt? The previous class.
सर जब हम सर कंसोलिडेटेड फाइनेंशियल बैलेंस शीट बनाते हैं तभी सर जो बुक वैल्यू एंड फेयर वैल्यू
हाँ
डिफरेंस आता है करंट एसेट का.
हाँ
तो उसको सर हम अदर इक्विटी से ऐड या लेस करते हैं.
नहीं, बुक वैल्यू एंड फेयर वैल्यू ऑन द डेट ऑफ एक्विजिशन पे डिफरेंस आ रहा है.
यस सर.
उसको रिवर्स करना है इन द इक्विटी अदर इक्विटीज पे एंड ऑफ द ईयर.
यस सर.
हाँ
अगर पॉजिटिव आता है मतलब रिवैल्यूएशन प्रॉफिट आ रहा है तो सर हम लेस करते हैं. अगर
लेस
नेगेटिव आता है तो सर
रिवैल्यूएशन प्रॉफिट आएगा तो लेस करना है. अगर नेगेटिव आएगा तो उसको
ऐड करना है.
लेस करना है. हाँ जी.
तो सर ऐसा क्यों सर? प्रॉफिट आ रहा है तो लेस क्यों करना है?
प्रॉफिट आ रहा था क्यों लेस करना है? क्योंकि आप उसमें पहले इंक्रीज कर दिया है. दैट इज व्हाट दे से हियर. तो हम उसको रिवर्स करता है बिकॉज दे व्हाट दे से हियर डोंट डू एनी रिवैल्यूएशन फॉर द करंट आइटम्स. तो वही आ जाएगा जो क्लोजिंग बैलेंस है, वही आ जाएगा आपका. वैसे जब करेंगे आपका जो क्लोजिंग बैलेंस है वही आ जाएगा. सो दे आर इनडायरेक्टली दे आर टेलिंग अभी मत करना, लेकिन लेटर ऑन आप प्रॉफिट से इसको माइनस करो, रिवर्स करो. अगर इंक्रीज किया उसको डिक्रीज कर लो, डिक्रीज किया उसको इंक्रीज कर लो. That is the procedure. There is no logic in that. I don't find any logic in that why they do it, but it is accepted by everybody, so we have to do it. It is a procedure. It is given for, and I could not logically think why this is happening. Why this is happening, I am not able to really understand. And I asked some of my friends, and they are also not able to tell me the answers why we are reversing. What is the purpose of reversing? Because it is said in the Indies, so we are reversing it. But why no one could able to understand? I am also still seeking the answer for that. Yes, I'll ask some more people. Those who are who has framed the Indies, those people I'll try to ask them. I'll put the question. I'll mail them. Let's see.
Thank you, sir.
Right. Anything else? Anybody else? Well, practice this problem on the chain holding and then let you know in case of any doubt. Definitely you'll be getting a lot of doubts. Lot of doubts you'll be having. But don't worry, do it 2-3 times, you will get very clearly. one thing you will be getting the problem in the Ncaa, closing Ncaa, to find out the closing Ncaa, how we are getting that we will be getting. And in that Joe, we have in this the Q is holding investing in R, and R becomes the subsidiary to P. So in that case, Q depends on which method we are following. So if you are following the fair value method, then we have to subtract whatever the consideration part which we are not considered, that is to be subtracted. That you remember, bus. Otherwise, everything should be all right, because the lengthy problem, I have taken some of the things, additional things, which is this one, this passing